Alright, so if you're still on the fence about getting the iPhone 17 Pro, let me bring you over to the dark side. Because I have some compelling economic insights that justify the splurge. Apple's launch of the iPhone 17 Pro isn't just a product update. It is a strategic economic maneuver designed to solidify its dominance in the most profitable segment of the smartphone market. And this economic angle reveals deeper layers in Apple's moves that go beyond the hype and the marketing. This isn't just about new features. It's about reinforcing pricing power, creating perceived value, and defending against market saturation. So buckle up as we unpack the numbers, strategies, and hidden forces at play. Tip no uno. Let's start with the cornerstone of Apple's strategy. Premiumization. The starting price of $1,099 isn't an accident. It's a deliberate move up. In a stagnant global smartphone market, growth isn't found in selling more units, but in extracting more revenue per unit. Apple is focusing its innovation on the Pro tier to create a clear and justified price differential from its base models. The heat-forged aluminum unibody isn't just a design choice. It's a value anchor that justifies the premium and creates a tangible, physical differentiator for the first time in years, making the high cost feel material and substantial. Tip no on dos. The split between the 17 Pro and 17 Pro Max is a masterstroke of versioning and price discrimination. It offers two entry points for the consumer. The smaller 17 Pro captures those seeking the latest tech without the bulk and cost of the larger model. The 17 Pro Max, with its best-ever battery life, is priced to capture the consumers with the absolute highest willingness to pay the professionals and enthusiasts for whom no price is too high for the absolute best. And then there's the storage tiers from 128 gigabytes to 1 terabyte. Each level provides a greater value proposition than the previous, offering more space for photos, videos, apps, and games. But the price jumps are significant. This is a highly effective strategy to segment customers based on their own usage needs and budget constraints. For instance, imagine you're an individual who uses your phone primarily for social media, streaming, and web browsing. If you've had your previous phone for the past 3 to 4 years, chances are you haven't even used up the full capacity of your storage. For someone like you, the 128 gigabytes option might be more than enough for your needs. However, consider the professional who relies on their phone for work. A graphic designer, for example, would need ample storage to store their projects and assets. The photographer or videographer might need it for their portfolios. For such individuals, the 1 terabyte option could be worth the investment. This nuanced approach not only helps Apple to cater to different segments, but also creates an illusion of affordability by having a lower entry point and maximizing profitability with higher-end packages. Now, let's talk about tip number 3, the bundling of Apple intelligence. This is a strategic land grab for the future of computing. Apple is positioning itself to reap the rewards of the next wave of innovation in artificial intelligence. By deeply integrating AI into the hardware and OS, Apple is creating immense switching costs. A user's data, preferences, and workflow become enmeshed with Apple's ecosystem. Leaving for a competitor doesn't just mean a new phone. It means losing a deeply personalized AI assistant. Imagine how daunting it would be to recreate the tailored experience of Siri after years of use, relearning functions, settings, and workflows. This moat protects their customer base and ensures continued revenue from services, accessories, and future upgrades. Think about it. Would you switch to Android when your iPhone knows your schedule, contacts, and communication patterns so well? Tip no. 4. Finally, let's talk about the carrier subsidy model. The announcement highlights deals up to $1,100 with a trade. This is crucial. It reduces the sticker shock for consumers by spreading the cost over 24 to 36 months on a monthly bill, making a $1,100 phone feel like a $45 a month decision. This financing structure, often with 0% APR, leverages time preference, the economic principle that consumers value present consumption more than future cost. It makes the premium accessible while locking users into long-term carrier relationships, which in turn feeds back into Apple's stable sales pipeline. Alright, so now let's look at the numbers. Apple's average selling price has been steadily climbing. While the industry average has flattened, this trend is visualized in the chart provided. In fact, Apple is projected to maintain an ASP of around $880 in 2023, significantly higher than the projected $716 for Samsung and $489 for the rest of the Android market. This means that even if unit sales decline, Apple's revenues remain stable thanks to this pricing power. To put things in perspective, if global smartphone sales continue their projected decline to 1.25 billion units in 2024, Apple will likely sell 280 million iPhones, translating to roughly $190 billion in revenue at an ASP of $880. That's nearly double what Samsung is projected to earn in the same period. And this raises a crucial question. Why is Apple able to command such a premium while other players struggle? The answer lies in Apple's value proposition, which hinges on 4 critical factors. First, innovation. Apple is consistently ranked as the most innovative tech company in the world, driving both hardware and software advancements. Second, brand perception. Their brand value has climbed to over $3 trillion, fueled by status, prestige, and a robust ecosystem. Third, distribution. Apple's control over its retail channels ensures a seamless premium buying and ownership experience. Fourth, customer service. Their reputation for exceptional after-sales service builds loyalty and trust, influencing purchasing decisions. However, the smartphone market is becoming increasingly saturated. Year-on-year declines are evident as customers hold on to their devices longer and upgrades lose their appeal. This stagnation presents a challenge for Apple. So how does the company continue growing when the market isn't? The solution lies in the consumer's wallet. The key to Apple's success in the maturing smartphone market is they've mastered the art of persuading customers to spend more per device. Consider this: since 2015, Apple's average iPhone selling price has surged from $629 to $833 in 2023. This impressive jump reflects a 32% increase in average sales, driven by a compelling value proposition for high-end consumers. And this trend is expected to continue. By 2024, Apple's ASP is projected to hit $900, marking a 44% leap from 2015 levels. So here's the big question. How are they achieving this? The answer lies in the 17 Pro's advanced features like the A19 Pro chip with ray tracing, the 8x zoom, and the titanium build. These innovations aren't just upgrades. They're stepping stones to the next billion-dollar revenue milestone. Now let's shift our focus to another critical aspect of Apple's strategy, the carrier subsidy model. While the iPhone 17 Pro is priced at $1,099 and $1,299, the effective price consumers pay is significantly lower thanks to trade-ins and financing options. Apple incentivizes pre-orders with trade-in offers of up to $1,100 for the Pro Max. This not only sweetens the deal for customers, but also manages expectations regarding the phone's value. Trade-ins encourage consumers to part with their older phones, which Apple then refurbishes and resells, creating a sustainable recycling program that reduces manufacturing costs. In essence, Apple's strategy is a blend of economic principles and business acumen. They leverage scarcity and exclusivity to drive demand, create a sense of urgency with limited time offers, and utilize the psychology of ownership to foster emotional connections with their products. So what does this all boil down to? In a nutshell, Apple has woven an intricate economic narrative around the 17 Pro, a story that emphasizes innovation, exclusivity, and value. It's a testament to their prowess in blending technology, marketing, and economics to drive sales and cultivate a thriving ecosystem. And as the smartphone market navigates through its eve, Apple stands tall, ready to conquer new heights in the world of luxury tech. Thank you for joining me on this journey through the intricate economic landscape of Apple's iPhone 17 Pro launch. If you enjoyed this deep dive, I invite you to subscribe for more insightful analyses on global economics. Your engagement fuels our journey. Let us know your thoughts in the comments, and let's continue the conversation there. Until next time, stay curious and keep exploring the fascinating world of global economics with us.